Hey everybody. Broadening formations are something that you can use to show the expansion of price. Yes, we've used support and resistance, we've used supply and demand, but we do know that after we've hit the support and resistance, there may be a bit of price discovery, new price discovery on the upside, on the downside as well. This is where broadening formations come in. They actually show us where did price actually go, including the wicks and all, right? I did a video about broadening formations and I want to share it with you. So let's get into it. Today we're going to identify trends and we're going to look at marking and using broadening formations. Identifying trends and marking and using broadening formations. So to identify the trend, basically a bullish trend is identified by higher highs and higher lows. And a bearish trend is identified by lower highs and lower lows, basically trending downwards, trending upwards. You've got pictures of what looks like trends. Here, you're high, and then it basically pulls back and goes up to high again, or at least higher than the previous high, pulls back some, it goes up higher, pulls back, goes up higher. Many times you'll see this happening. If you're using moving averages, you may see moving averages dancing around in here too. The moving average is only responding to previous information. It is not forming. It's not telling you future things. That's not what moving averages do. Moving averages really takes past data and aggregates it, but you'll see that as the price or the trend is moving, the moving averages too, and moving averages can show and can play some support and resistance. So you need to know that if you're moving averages, that 9, 20, 35, 50, especially the higher ones, if it's a 50 or a 100 or a 200, though the higher you go, the stronger the support or resistance that moving average can provide. All right, so identifying an upwards moving trend. We know that things generally don't go straight up forever, but they go up and they come back generally to the center line, go back, go up and come back. That's what kind of happens with trends that are going upwards. Higher highs, higher lows, right? Here is a chart, SPY, triple Q, perfect example of trending stocks. We've been trending now for a lot of minutes, right? We've been trending, and I could really have gone back further, but I figured you all could see the trend. Not that you needed me to even tell you the trend, because everybody knows what the trend is. We've got higher highs. Okay, we've got higher highs. This is a high here. It goes up. This one's a higher high. Then it continues higher highs, higher highs, higher highs. We can continue on. This is what the trend is trended. This is actually a higher high. All those are higher, 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 trending upwards. Yes. Doesn't mean that there won't be some short-term trends in the middle. Like here, you've got a trend downwards here, a short-term trend that happened for almost a month, looks like a shorter term trend, but then the overall big trend was still bullish. You got some short-term bearish pullbacks, short-term. Here's one, this is a pretty good pullback there. Short-term trending there. Actually, I could take that. We'll maybe go back to that same chart because I see a broadening formation there that we could potentially draw, but we'll swing back to the SPY chart later. Okay. Trends generally overall is bullish, but it doesn't mean that you won't have some pullbacks that happen along the way. Then we also have bearish trends. This is Google. Google since July has kind of been on a bearish trend. And you see, I drew two different lines here. I drew like one that started in July that's been coming down, and the price kind of danced out of it and then came back in. This is a overall, bearish trend. But if you look at the shorter term, it's still bearish. But if you look at like a little shorter time frame from the beginning of August till now, it did a little dance here, but it's still, this is the red. Between the red here is that downwards trend. You can draw so many trend lines. Like we could trend line ourselves until we're tired, but you do want to kind of look at overall trend, right? And trend based on what you're trading. If you're trading something for the day, you want to know the trend for the day. If you're trading it for the week, you want to know what's the trend for the week. If you're trading it for the month, you want to know that. You're trading it long term. Let's say you're buying leaps and you buying out 3 or 4 months. You're going to want to know what's the overall trend over a higher time frame. So when you're charting your trends, you're looking for a time frame that matches your trade. So you don't need to be looking at, buying leaps for 6 months, but you're looking on the daily chart for the trend. No, that's not relevant, right? Right? That's not relevant. Or you buying a month out, but you're looking on the 15-minute chart. No, that's not relevant either. That's not relevant either. But you're buying you're trading for 15 minutes, but you're looking at the 2 week and the weekly and the monthly. That's a mix up too. If you're only trading for 15 minutes, you know what's happening in the shorter time frame that's focused on what you're trading. Okay. You want to trend or do your charting, trend looking, depending on what time frame you're trading. That's going to matter. That's going to matter. So then what is a broadening formation? A broadening formation is a chart price is a price chart pattern. Oh, all these words looking like they run together. Is a price chart pattern identified by technical analysts. It is characterized by increasing price volatility and diagrammed as two diverging trend lines, one rising and one falling. A broadening. If you think about the word broadening or broadening basically means it's getting bigger. It's a formation that's getting bigger. As price passes, it's getting bigger. Here's an example of a broadening formation. Broadening formation. Basically, we're here and the price is bouncing from, low to high back to a low. So our broadening formation is, even if I drew this, swing low to swing low, right? It may dance around a little bit, and then we can draw, it goes up, and then back down to the bottom of this. Now we got another swing low. And if it runs on up, now we got a swing high that we can connect to. Swing high to swing high, or high to high, basically is how we do that. Now we could also say high to high being this one. We could also do this, but you kind of want the highest high to the next highest high. All right, that's how we're going to show you how do we draw them. But you need 2 highs and 2 lows basically to draw your broadening formation. And the premise is that as you put on your broadening formation, let's say we started with just these 2 and we extended it, and we started with these 2, which I'm not sure if I would have picked that one, but that's where it goes. These 2 here. Then you're saying, okay, this is now getting bigger and price should stay within it. So it's going to continue to expand. Price will continue to get broader along the way. That's why it's called a broadening formation, right? I'm going to talk to you a little bit about support and resistance and broadening formations, because they can work hand in hand, but sometimes they can cancel each other out. Well, one can cancel the other out. The reason why broadening formations form is that the market is attempting to discover the true price of an asset, right? As you're figuring out what is the highest price people are willing to pay for it, what is the lowest price before people start buying it up. That's what the market is discovering, the true price. In other words, the market is exploring new higher and lower prices to find the equilibrium point between buyers and sellers. So a broadening formation is created along the way, because as we get higher, there are people who step in and say, well, I'm willing to buy that a little bit higher, or I still want some and it's a little bit higher, or I'm down here and I'm selling, I'm buying at this low price. I'm willing to buy to turn it around, or I'm willing to sell a little bit longer, let it go a little lower. Okay, here's some patterns, if you want to call them that are different broadening formations. First, we have the symmetrical broadening formation. Right now, one thing I probably would do here too is on this one, I would draw from this high to this high. So that would be another broadening formation, right? Because you got a swing high and a swing high. Swing high, I'm not sure why this right here, they're picking this one here and this swing high here. Now, this seems like it's like in the middle, but I guess if you're looking for shorter time frames or time frames that are closer to current price, current activity, that's how you could end up with this one. But the broader time frame or the broader formation would be out here. You got right angled or ascending. Well, you got pretty much flat line where your support is, right? But the highs are going higher, higher. So now you've got kind of a right angle. We're expanding, going out. The buyers have determined this is where we're buying. This is a good place where buyers step in, but the selling area is getting higher and higher. Now we got a right angle descending, right? Resistance here. And this lower lows, boom, 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 kind of gives us a little bit of a trend here. You're showing that the selling is happening down, going lower. And as it pops up, now you could also say, that looked like that chart over there. You could also view that one as a broadening formation right there. Because from this swing high to this swing high could also be one. But then now this one, this line, this flat line here is showing from the resistance area. The ascending broadening, looks like this one looks like this one. Swing high, swing highs, connect those. Asymmetrical, where we swinging high, but then this one's a little more pronounced going to the downside, but we still have the highs here. Notice we're not connecting these going down, because if we do this, what are we showing here? We're showing a trend there. That's not showing a broadening formation. That's showing a trend. We want to see shorter term. Where's the price expansion, or where's the magnitude happening? And then we've got a descending broadening, where the broadening formation is this. We're still going downwards, right? I don't see this one drawn as much, but I think this is interesting because I saw some charts today I was looking at where I did see some descending broadening. It was like, I wonder what do you do when it's going down, when the top part isn't going up? What do you do there? And it looks like you can have a descending broadening. Interesting stuff there. Interesting stuff. I'm going to tell you in a minute how you use this, because we don't really care that it does this if we don't know how to use it, right? Because so that's what and what, right? So this is Ulta on the monthly time frame. Ulta on the monthly time frame. And if we were to draw our broadening formations, we've got the swing high here to connect them. Swing high shows us there. And then we've got a swing low and a swing low. Now, what the premise is that price will move between the magnitude. It will move from top, to the bottom, back to the top, come to the bottom. And you even see here that Ulta's trying to turn and go. And then the thought is that it will go on up here. And this was extended. It would go on up here and come on back to another broadening formation place. Now, looking at this, do you see, before I even get to that slide, how we could trade that? Be thinking, if our thought is that it's going to hit the broadening formation and go on up just like a buy zone or like a support area, then what do? Well, we trade it going up.
Yeah. Mm-hmm.
Yeah, we trade it going up. The reason I picked the monthly chart is because you should try to draw broadening formations on higher time frames, so that way it can give you more information on lower time frames. So you would look to see, you would probably check your ATR to see, okay, if I feel like it's going up here to the 600 area, how long will it take me to get to 600? Well, we're in the 350s. So, how long do we think we need to go there? Or what targets do we have along the way that I think I'd like to hit? You can say, okay, I got some more targets in here I could potentially shoot for if I don't want to ride all the way to the top. But your thought is that it will go in whatever period of time on up to the top of this formation. Okay, just how long we want to ride. That's our broadening formation on the higher time frame of Ulta. Now this is Apple, the Apple chart, and I believe this is the daily chart. Yes, I'm here on the 1 day chart on Apple. This is on the 1 day chart. And I did from this swing high to a swing high. This is how I drew this on the broadening formations, and I did the swing low, swing low. And what I did was I let it extend itself back here, but I was I basically put the extension on, but I was connecting these two dots and connecting these two dots. thought is that price will dance between these two. And now that we've gone, up and now we're down, we kind of came back, touched it again, retest. And now the thought is that it will go on up, and whatever period of time that it will go on back up to the 236 area, right? With a few targets on the way. You got this as a target, this as a place it's going to go. You got this as a target. So depending on how you want to ride it out, do you want to ride from one side of the broadening formation to the other, or do you want to just do targets along the way? If you're saying I want to go up from here, you've got targets along the way. The top of these candles is a target. This at 224 area. Up here at the top of this one in the 228 area, that's another target. Up here, actually, there's one here, the top of this candle, 229, and then this one. All of these are targets for your take profits or whatever. It could possibly go there and pull back a little bit, or you can say, this is where I'm going to take my profit. I'm just going, I know these are areas where the price could slow down, could pull back. I might as well take some of my, depending on how big your trade is, you can take some of your weight off, that kind of thing. Broadening formations. The thought is that the price will dance between these two and price will expand. Now, this is what's interesting. Generally, we look only at support and resistance. That's what we do, right? We look at support and resistance. And I'm definitely not saying don't look at support and resistance, because we need those areas, because this is where the buyers and the sellers step in. You do need those areas. But in the midst of doing that, you're also keeping in mind that where does price want to go? Even if it slows down here and pulls back here with sellers stepping in, it wants to go to the other end of the magnitude. So now the question is, are you going to wait to, while it goes there? But the price is that the premise is that it wants to go to the other side of the magnitude, or the other side of the broadening formation. Okay, still using our support and resistance, still looking at our trends, and adding broadening formations, just so we'll see where does price want to go. Okay, this is what happens sometimes. We put on support and resistance and price keeps going, and you're like, how you just going to ignore the resistance? It's because it's trying to go to the other piece of the magnitude or the broadening formation. Maybe a way for us to as we're doing our charting, we keep this in mind as we are placing our strikes. If we're using support and resistance to place our strikes, that we look at this to say, do I put my strikes then beyond the broadening formation, or just beyond support and resistance? Okay, this is Tesla on the daily chart. Tesla on the daily. So what I did here, I did a swing low, created that one, swing high, and created that one. And I just let the extension go backwards from here. But notice, even when I was connecting these two things, but notice how these are also at the broadening formation. I wasn't connecting those. I was connecting these. And even these two, I connected these two here, but notice how you've got touches along the broadening formation going along the way. I wasn't documenting these. I was looking for these two over here. So this is our Tesla, right? Going from end or, top of the formation to the bottom, top of the formation, trying to go back to the bottom. Now it did drop, and now this may go back up and test the top again, and then come on back down. We'll see. Basically your thought is that it wants to go to bounce between the formation. That's what you're thinking the price wants to do. Okay, that's the Tesla one. So how do we use these broadening formations? How do we use them? Okay, so the premise is that the price goes from the top of the formation to the bottom and back again. This is what's called price magnitude. You may have heard magnitude mentioned before. This is magnitude, where you're wondering what is the breadth of the trade. Where does the price want to go? And then you're also thinking how do we use them? The buyers, you're going to enter trades as the price leaves the edges of the formation. Enter trades as price leaves the edges of the formation. You want to wait until it truly rejects Make sure that the rejection is confirmed, right? Also, what I didn't put on this chart, on this slide, but you also want to keep in mind, like, what if you see a hammer, let's say, or you see something that looks bullish, but it's at the top of the broadening formation, where there's no more magnitude. Not that it can't break out of the formation, but there's not much magnitude. So then you want to watch to see, okay, where are we in the formation? Is there room for it to go up some more? And if not, then you need to wait and see what happens at the broadening formation. Or you're at the bottom of the formation and there's a shooter, or basically an upside down hammer. Is there more room to go down? And if you're not sure, you need to wait. We need to wait and see to make sure that the rejection is confirmed, right? You want to make sure that the rejection is confirmed if you're a buyer. If you're a buyer, you want to do it that way. If you're an option seller, we maybe select strikes beyond the formations with the thought that price won't go there. We're going beyond the formations thinking that price won't go there. Swing high, right? I'm going from this red candle to the top of this wick of this, the high here, 544.23. And if we're looking at the swing low, here's a low. Basically, this looks almost like just a downward trend. Let me see if I can turn off the extension to the left. So now we've got Meta. It's got some room though. The magnitude, it hasn't reached it. No, if it wants to touch this again, if it wants to come down and touch a little lower, it can come on down some more and hit, and then potentially go up. That's a broadening formation. I mean, it's got magnitude up into the 5. We know it's been up here 544 before. It was a month ago. It can go right on back up to this same area again. CSGP. Never heard of these people, but they showed up on a scanner. I don't like it on the daily for one. But as the thought goes is that every stock can have a broadening formation drawn on it. Probably depends on what time frame you want to work with. Depending on what you're doing time frame wise, we can look at the week. The month looks like these look kind of trendy, kind of trending. Right? Would this be swing high? I don't really see a swing low. This looks like more of a trend going here. And I don't feel like I would want to force it, like to put something here. You probably could, but that seems like it's just too drastic. This is more of a upwards going trend. You could also do these swing highs and match those up with these. That broadening formation could be a little different. It really comes down to the closeness that you want to get to on the broadening formation. How close do you want to be? You want current, price action. Have y'all been looking at NEO? How NEO's been kind of running? Anybody y'all looked at NEO in a while? Used to be NEO was talked about, was all the rave. It was talked about nonstop. Next thing you know, it was nothing. Everybody was talking about NEO. And then I think I did XLC based on the monthly chart. Down here in the bottom right. There you got honestly, you could swing and back. Let me go get more time. Maybe that's all the time to get. XLC hasn't been around that long. It won't give me 4 years worth of time. Maybe it hadn't been around 4 years. So there we go. High of XLC to the high of 88. You've got this longer time frame. This was October of 2022. But then you've also got some that's even closer, some closer time frames. I think that came off of a different time frame. Swing low, even close here. That's XLC on the monthly time frame. Extend it down, look on the weekly. You can see how price stays in between there, even on the weekly. Generally, that mother candle, as they call it, like a 3 candle, or those big mama candles on higher time frames, are going to keep the baby candles inside of them on the smaller time frame. Sorry. So the big candles on the higher time frame is going to keep all the babies. Not this one. That's the hourly chart. That's not the one we're trying to look at. Going to keep all the babies inside of it on the lower time frames. These are the same lines that I drew on the monthly and the weekly are now showing up on the daily. Price going pew, 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 pew. Where do we see it's going next? I just put a broadening formation on Coinbase. Coinbase looks like it came right down to the bottom of this one, and it turned and started doing its thing. But notice, this is what I wanted to, this is the point I was making about the support and resistance. Of course, we see support here, right? And then, but when it got down to in this area for support, it might have stuttered a bit, but then it went on down and made a newer low, like it made some new price discovery. Even here, we've got resistance that was here, and then we've got resistance here, we've got resistance here, but price continued to set newer highs, which created this broadening formation. So we do utilize our support and resistance numbers because that is places where buyers and sellers can step in. But we keep in mind, I think we should now also add to our thoughts that is there a broadening formation at force? Right. So I was saying too, if you, let's say you were here and you were thinking, I like this is looking very bearish. If you didn't have these green candles, say you didn't have these green candles and you thought this is looking very bearish. So I'm going to move us over to the right some to say, okay, you didn't have these green candles and you didn't really know this, but you had the broadening formation. Your mind might say that this is, we're still bearish because we're going down, 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 and maybe, it'll keep going, right? But if it has reached its magnitude, or if it's in the place of magnitude, you can say, okay, well, this really is the place where it's going to try to turn around, which in this case it did. But you have your two, a swing low. I don't really see where that one matched up with us in the past, but I'm saying, oh, here we go. We got some touches back here, which I don't know if I would have. Well, you could have, if you were going to just put on this one. Maybe you didn't have this big red candle here, but you had these here. Hey there, trader. I think I've discovered why most traders are not profitable or are not consistently profitable. And that is the lack of charting technical analysis. Yes, it is a lost art, basically. We're looking at the chart. We see that the candles are going up and down, but not really knowing what is really happening. Everything you need to know, almost everything, like 99% of what you need to know, is in that chart. So I've created a training resource that is called Chart Your Way to 100K. It starts with the basics of what is a candlestick, all the patterns, all the things like that. Starts with the basics, and then it goes up from there. It includes candlestick patterns, chart patterns. It includes indicators. It includes what you should be looking at when you're charting, trend analysis, gap analysis, all these different things. Everything you need to go from no charting ability up to being a master charter, you can find in this Chart Your Way to 100K resource training. All right. You can go ahead and grab it at my website, educatortotrader.com. I promise you, this is going to make the huge difference in your trading consistency. All right. Go ahead and grab it. What if all we had was let's say we use this touch and we use this one. Let's say that's all we had was these two. And we didn't have anything after this. We didn't know where price was going to go on coin, right? Then Coinbase went on up to the top of it, just rode along this broadening formation, and then finally started to reject. Once we reject it, you can ask yourself here, when it started coming down, where is it going to go? Where could it possibly go? Started coming back down. Where could price possibly go? Well, you've got the broadening formation that you would have written, that you have drawn off, and you say, okay, then it could go from a magnitude standpoint, it could go down to where it touches the broadening formation again. And it did just that. Boom, 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 touched the broadening formation and returned. Your question now is, where does price want to go back to? Where does it want to go back to? It wants to go back up here. How fast it goes, don't know, but it wants to go back to the place of magnitude. Turn the extension back on. It wants to come back up to here, which is not far-fetched because price has been up here before. Price has been up here before. So to come back into coin for the 230s or whatever, price has been up here. So it's not like to say it can't go there. Well, it could. It's been here before. And it wasn't that long ago that it was up here. Okay, so price wants to come back sooner or later. It wants to come back up here into the 240s. Again, it's been here before. And it wants to go back up there. Okay, so what our thoughts are is that while we're drawing our support and resistance, we're also drawing broadening formations. On the higher time frame, you're looking for a place, a swing high, swing low, swing low. On the broadening formation, on the same chart that you're putting your support and resistance, you're also looking for your broadening formations to tell you where can price go. This is the one I drew on Tesla on the weekly chart, right? And I drew this based on this candle, that's a weekly. And then I just extended it back. I just did the extension. So that's two candles here. And then for the one here, for the lower body, I did this candle and this candle. You want a swing, a high, a low. It just needs to be a swing high and a swing low. And you actually, I see, if we were looking, we could go with this swing high and over here to this one. You could do that as well, which basically is from here to here. You're doing swing high to swing high. Well, you would want to get higher up here. Again, the broadening formation is almost like trend lines. You could be drawing, but you kind of want to, I feel like you kind of want to be closer to your current price action. Generally, if you put it on, you're going to see that even if you look back in time, it's still going to hit some of the lines are going to be there too. Okay, swing high, swing high. Make sure we watch a video. I'm going to put another one in the chat so that way you can get some examples through some of those videos. I think that'll help us too. This has been fantastic. Broadening formations and trends. Trends are things that I think we kind of had an idea about trends. This is nothing new there, but broadening formations is something that's a little bit newer. It's been newer to me, but as I see it, I'm like, well, I hadn't even thought about that. But it's magnitude. Where does price want to go? Like new discovery, right? So just add that to your charts along with the support and resistance. I don't see it as a replacement place. A replacement thing. You got support, resistance, and or supply demand, and your broadening formation.